to tell the truth, honestly. I absolutely hate running, but it's crucial when we live in such a comfortable world where we have everything to our disposal. We have Amazon Prime, we have the supermarkets. Like, it's very crucial that we live a life that's not comfortable, because a lot of the time we can get complacent, and yeah, especially as someone that's trying to become successful in business, become an entrepreneur, we have to constantly have an uncomfortable life, because there's no room for complacency in this game. There's a lot of people that want to do better than you, and so you got to always stay ahead of the curve, do everything that you can to get that tiny little edge. So it's a Sunday morning, every single morning, usually with a friend. I don't think he's feeling too well, but usually I come with a friend. We do 2 laps of this park here, and then we get on with our day. So that was the run. I'm gonna get home, eat breakfast, and then get on with some watch list prep.
Traders by just understanding positioning, sequence, entry, looking into more granular details to positioning being the big one of those trades. I'm going to go into that more in a technical point of view, because there's a really great question that was sent in about.
So it's been a busy day. As I showed you guys in the morning, went for a run, and then I worked on my watch list preparation for the whole day. Did some other stuff as well in between, spent time with family. But now I've got the watch list finalized, as you can see here on the right. I need to explain and expand on more. So what I'm going to do is I'm going to break down these pairs from the higher time frame down to the lower time frame, and I'm going to explain little nuances, little details, and maybe you guys can get some value from it. I chose pound Kiwi over the rest, but there are some good ones on this watch list as well that are very similar to pound Kiwi. I just thought the value on pound Kiwi was better than, for example, Euro Aussie and Euro Kiwi. They're very, very similar trades, but I just like the overall picture of pound Kiwi more. So let's go on the daily. So we always frame the trade on the higher time frame, always. Now, you can see this value area here. Prices come up with a 1, 2, 3. They tag the area, sold off. And then we've got this range forming here. Now, this is not the most proportionate impulse continuation. Like if we look at this run, impulse and continuation, that's not the most orthodox thing. However, I can just look at the daily range and see how is price reacting in this area. Now, we can see here prices come up. Let's tag this very sharp daily value area. You can see that was the origin point of this 1, 2, 3. Now this 1, 2, 3 eventually built up a lot of volume, came back into this hook point. We then get this very strong retrace again, more than 50%. And then what else do we do? That we had actual strong follow through here with this heavy body candle. Now that confirms that we were in a bearish run. And if I go down to the lower time frame, it makes it even more clear how we were going to time this entry. Now, there's a small detail here of the value area as well, is that we have this hook point here. Now, how can I tell this is a value area? Look at how much volume we get from that area. Price comes up. After having this near miss, price comes up all the way back up to the high, sells off, and then we're going to look at the intricate details here. This is very interesting price action. How you're going to be able to navigate that is going to be very interesting for me to show you guys exactly how I'm playing that. So, hook point, I'm going to fill that in. Look, we've got this near miss, price formed a lot of volume, it's reaching up above into this value area. Now the next value area would be here, and if it's going to gravitate towards that, it would most likely gravitate towards this. So this is the line in the sand for the shorts from him. Now going down to the 1 hour, I'm going to frame this trade with this main inflection point in mind. So as you can see here, price is not moving as orthodox as we usually would see. Now the usual continuation sequence would be tighter flag, impulse, tighter flag, impulse, larger flag, and then we'd run. However, what are we seeing here? We're seeing price sells off, has a steep pullback, sells off, breaks the low, retests it, and then sells off. Now, this is not the best sequence, however, we're so well positioned that all we're going to have to do is just wait for deliberate price action here. Very clear price action telling us that we are confirming a trend to the downside. Now due to the unorthodox sequence that we've got, right there. I want to be looking for the most confirmed entry that we have, and that would be a deliberate 1 hour 3 touch. Now, this is not our target. This is just an inflection point that we have to be focused on. Really and truly, the target would be maybe getting out around about these areas here. I'm just going to be aware, how is price going to react at this low here after I do get an entry here. So that would be around about 23 pip stop. If I'm a bit more wide, 21. Down to that low, you got 3.5 to 1. Then down to here, you got 6.3. So overall, how we see that we built the picture from the higher time frame down to the lower time frame, these have a lot of value in them. So regardless of how good they look, again, I'm going to preface it, regardless of how good your forecast looks, how much time you've spent into your forecast, the work that you've done, the preparation, that does not mean the market owes you anything. It owes you absolutely nothing. Your hours mean nothing, right? So just trade what you see. If the market gives you an entry, you enter. If it doesn't, then you just leave it. I need a favor from you guys. I need you guys to go down, subscribe, like, and also comment what pair is your favorite for the week and what are you looking at for next week. What are your top 3, maybe top 3 pairs for the week, right? Tell me why as well. You can't just give me any random pair. I don't want to just hear Nasdaq, guys. No Nasdaq, please.